Perfect. What up for everyone on the YouTube replay? I hope you're having a great day. The market is giving us a little buy the dip opportunity before the FOMC meeting. So if you're watching this on the YouTube replay, if you skip exactly 1 hour into the stream, you'll see the market either is going to go up a bunch or down a bunch. But yeah, there's a huge dip I see. Yeah, Duolingo's on a nice 5.5% dip. DoorDash, Ferrari's down 4%. We did buy some Ferrari. Well, I'm always a fan of buying fractional shares. Never be like scared of that. So we bought zero point 0.1 shares of Ferrari today because I didn't have too much cash to buy the dip. But yeah, I always, especially in this environment, you want to be really slow to allocate dollar cost average. But let me give you a quick portfolio update. Then I'll show you some of the buys I think that are pretty good, like Uber right now. Uber is a great deal right now. And the reason Uber is down specifically, someone asked, why is Uber down specifically? It's because of Waymo. It's because of Google. Waymo reaches 14 million paid rides in 2025, and they're now doing 450,000 weekly paying rides on Waymo. And that's basically direct competition for Uber. But look at this multiple, 24 forward PE. You know what? Let's just start with Uber, then I'll do the stock portfolio update. Let's just get straight into it. Then I got some other stocks. It's also sending DoorDash down. Instacart, well, actually, Instacart is down specifically. That's ticker symbol CART because it's down 7% on the day. Amazon is expanding their grocery delivery network in over like a bunch of cities, and it's actually deployed now where people are doing it. So anyway, here's Uber right here. They're artificially down because of the Google Waymo news. But here's what I like about Uber. Check out this metric right here. These are their monthly active consumers. So not just monthly active users, but the people who pay money and consume it. It's at 189 million a month. When this exact same time last year, it was 161. So that's a massive increase, nice little increase there. And, mobility revenue, delivery revenue, just like Uber Eats. How's that growing? Uber Eats revenue's up 29% year over year after grew 19. So that's a nice growth driver for them. And here's the best part. If we go to the FCF, which stands for free cash flow, they're printing free cash flow. And these are nice year over year growth rates as well. 2 billion plus of free cash flow every quarter. And not just free cash flow, but net income as well. Now, they have had an artificial one-time adjustment. If we look at this quarter net income, it says they made 6.65 billion. So that's why you don't look at their current PE ratio. If you did, it says Uber's trading at 10 times PE. They're not actually trading at 10 times PE because they actually made $1 billion this quarter. They're making like $1 billion a quarter. Phenomenal year-over-year comps as well. It's a record Q3 though. And let me show you the forward PE. The forward PE is at 24. So that's why I think Uber is pretty attractive. You want to look at the forward PE, like 24 for an Uber, like software behemoth that just basically collects a royalty every time you do something in the app. They also have a huge stake in Grab. They also have a stake in a bunch of other companies as well. Hey, what up, Rand? I hope you're having a great day. So yeah, let me give you a quick portfolio update. What up, Best? Yeah, we'll look at Duolingo after this as well. Here's my dividend-only portfolio. We're basically flat. We're down 0.14%. Remember, in 50 minutes exactly, we're getting the FOMC meeting. We're getting if they cut 25 basis points or not, and 90% chance they are. And we're just assume the market's going to move like crazy in about 50 minutes. So we'll be live for that. If you're on the YouTube replay, you can skip in if you want. But yeah, here's us year to date. We're up we're up 15% year to date. Not too shabby. We were doing pretty bad in April, but here's all our stocks and here's our total percent change on every stock. We're up on every company except Carlyle Group right there. That's a really kind of interest rate sensitive one there. But here's our Roth IRA. Our Roth IRA is also down on the day. Dang. Oh yeah, Cavco is doing great. Yo, I love Cavco. That's our newest position in here. I bought them at all-time highs. We're still down on the position, negative 0.6. But yeah, Webull is having a great week. Okay, so yeah, that's our Robinhood portfolio. And then finally, I'll speed this up because I've taken forever here. I got so many portfolios. I got a lot of stocks to look at here. What up, Brand? Hope you're having a great afternoon. Thanks for those gifts there. Really appreciate that. Do you do mining companies, SGML? Hey, maybe we'll check that one out too. So yeah, here's our Webull portfolio. Here's our open profit and loss. We're only up 21% all time. And we got some winners and some big losers in here. Progressive actually just announced a $13 special dividend, which is pretty cool. Our newest position in here is actually Southern Company, ticker symbol SO. If you're looking for a company with a bit of a higher yield, but also should keep up with growth and stock price appreciation, check out SO. They have a 3.5% dividend yield. They're a regulated utility. I just think no matter what, you're not going to outperform the S&P 500 in the long run, but you should legit just get 7% of your money on average back buying that stock, I think. But yeah, that's our newest position in there. And let's just get to some of your stocks. Duolingo right here. Yeah, Duolingo. What up, Rand? Oh, yeah, and this is our buy, never sell portfolio, our Moomoo account, where we bought a little. All we've done today is buy a little fractional piece of Ferrari stock on the dip there. I like their numbers. So Duolingo, let's check this one out. This is a software company. It's kind of being hurt by the AI thesis right now. Like OpenAI is making a language learning app. So you get Duolingo, you download Duolingo and pay for their subscription when you're trying to learn a new language. And maybe in 10 years from now or whatever, it might just be free on AI to learn it, or I don't know. But for right now, here's why I'd certainly put Duolingo on the watch list, because their right now numbers are insanely impressive, because they're a subscription model company. 85% of the revenue is their subscription revenue, and check out these year-over-year growth rates. I kid you not, this is insane. It's up 45% literally every quarter. Like there's only green numbers all for eternity since 2020. Like it's just went from 28 million, now it's 229 million just this quarter, and it's at basically 50% growth rate. Like that's insane. And if you don't pay for their subscription revenue, you actually see a bunch of ads, and we go to their advertising revenue. That's actually up 45% year over year as well. So the core business is doing great right now. But I think that it's sadly fairly valued, if not maybe slightly pricey. It's actually a little pricey at this price. So if we look at the forward PE, Duolingo actually trades at a 44 forward PE. Are we looking at the forward PE and not the current PE? Because it says they trade at 24 times current PE. Well, sorry, let me drink my tea here. They had a little one-time adjustment. So it says they made 292 mil of net income this quarter. This is why you always look at the operating profit, because it excludes those little one-time adjustments. They didn't actually. It was a one-time tax benefit for them. So, but the core business was a record Q3, record profitability, 35 million, record everything, deleveraging the balance sheet like crazy. I actually love Duolingo. I'd certainly put them on the watch list, but I wouldn't load the boat on them today. Like if I wanted them as 5% of the portfolio, I certainly wouldn't make it 5% today, because it is a little on the pricey side. Again, that 44 forward PE, but it's everything there is headed in the right direction, and that kind of stock certainly deserves a high multiple with that subscription growth. It's so impressive. It really is. Do you expect a cut in today's FOMC meeting? I do. And well, here I'll show you the actual market expectations. So if you guys don't know, in exactly, or actually 45 minutes, we get the announcement if the Fed's going to cut interest rates by 25 basis points or not. And right now, the market is pricing in an 89.6% chance of a 25 basis point cut and a 10% chance of no change. And usually the comments that Jerome Powell and the Fed have to say also moves the market. So in about 40 minutes, the market's either going to go up or down a bunch. So it should be fun. And hey, thanks again, Rand, for those gifts there. Let's check out Path right here. Yeah, this is kind of like a robotics software company right here. Now, I have been trimming this one. Look at this at $19. Well, here's the thing. I've been an absolute diamond handing bag holder on this stock. Look at the very bottom right when I was buying this stock. 2021 at $57 a share. My first ever, I put $400 in this stock at $57 a share, and it's currently, 18. So I've been diamond handing this stock since 2021, basically since the IPO. We've just lowered our cost basis slowly. I'm not too happy as a shareholder, but we've had a great little pop up. So let's actually go look at their numbers right here. So I do own this one. I might be a little biased. Let's see. So the forward PE is 106. So that's certainly not cheap, but here's the other thing. Most of this market cap is just their net cash on hand. Y'all aren't going to believe this. So if we go over, actually, let's see what they reported first. I'm kind of getting ahead of myself. Here was what the analysts expected this quarter. Let's see why they gapped up specifically. The orange line is what the analysts expected. They beat on revenue. Wow, a massive beat on net income / EPS and on EBITDA. It really was a triple beat quarter. Deleveraged a little. Let's see. So they have $1.4 billion of cash, of net cash. And let's see how much, since they have no debt or no net debt, they make interest on their cash. These cash-rich, heavy companies, that $1.4 billion of cash isn't just doing nothing. They're earning interest on it. They made $12 million of interest just on their cash this quarter, which adds money to your bottom line. So actually, it's not that. So about 14% of their entire market cap is their cash on hand. Yeah, actually, they did have a one-time adjustment to their net income. They didn't actually make 190 million, but they probably made around 25 million, because when you add in the operating profit doesn't include the interest they made on their cash or the one-time adjustments or the taxes. But anyway, it seems like it was a great quarter, but still expensive. That 106 forward PE, even though 14% of the company is cash, it's like sadly it might be still a little pricey, even, or it's pricey at this point even. And I certainly did not time my buy too well on them. Hey, Brian Paul, shout out to the member. No way, good to see you, man. So he said MP Materials, yeah. So this company, they basically, I was looking more to them. They basically won't get any revenue, I think, till like 2030 with their Apple deal. So they do have a deal with Apple. Oh, look at this. U.S. government acquires a 15% stake in MP Materials to strengthen critical mineral supply chain. So yeah, the government cannot allow MP Materials to go bankrupt. I know they're opening up this one rare earth mineral mine that'll supply the U.S. for the next 50 years of certain rare earth minerals. But their current earnings are really being impacted because their supply chain cut off with China. So check this out. The number one key point here says materials segment revenue fell 50% year over year due to cessation of sales to China. So China's made it, they actually removed this recently, I think, but they made it super hard for U.S. companies to get rare earth minerals from them. They made us go through an extra permitting process, all our companies. So on that news, the U.S. government, it's kind of like to combat China, we can't get their stuff. So it's good that the U.S. government can't let them go bankrupt. We need the infrastructure. So it's a tough buy, though. I mean, I don't know. It's certainly a tough one to maybe own meaningfully, but it's a nice like hedge almost. If there, it's maybe worth owning like a little bit of like as a diversification hedge if war escalations tense up or whatever. Interesting there. And hey, what up, Narc6? Good to see you, man. Duolingo also uses AI. Wouldn't it make the app better? I'm so confused on the. Yeah, there's a lot of mixed sentiment on Duolingo. CleanSpark, House Pfizer. CleanSpark, this is just a Bitcoin mining company, and not to bag on them specifically. I bag on all the Bitcoin mining companies. There's never a scenario ever where you'd really want to buy a Bitcoin mining company over actual Bitcoin. CleanSpark, what did they do? Well, here's the revenue right here. They just 100% of it is Bitcoin mining. And in the long run, none of these outperform. And it's not just CleanSpark. I'm talking Marathon, Hut 8, Corsi, Hive blockchain, I mean, Marathon, all of them. So I just want to, hey, OLP Papa, dude, thanks for actually, we got to cover this one. Thanks for that gift there. Someone sends a gift, or Rose always try and get to theirs first. Thanks, OLP. You're always in here. I appreciate you. So here's, let's check this one out. It's actually a Japanese company. They haven't done too well. They're lower than their 2019 price, but let's go look at the actual numbers because that's what matters. And let's convert the currency from Japanese yen to USD just to get a better idea of what these are. So they do research, development, and manufacturing, marketing, licensing of, okay. So the sales year over year are down 8%. So the revenue's down 8%. And so the net income's really choppy. Like they lost 600 million that one quarter, but these are weird, like one-time off losses because the operating profit, the core business, it's like an insurance company almost where they like make a bunch of money. And so it's like so unpredictable how they get their money. But on average, like if you average out the 4 quarters of the operating profit here, they are doing well. So what's the forward multiple if there is one? A 30. So they're trading at 30 times forward PE. That might still be pricey. So look at this. I'm glad there is analysts. Check this out. So notice the past 3 quarters, they're missing on expectations. Big miss on revenue. No EPS coverage because it's in Japanese. But EBIT, yeah, they missed on even their EBIT this quarter. So maybe that's specifically why the stock has been doing bad right now. So nothing's really blowing me away there. I'd probably rather stick with the US one, but maybe 30 forward PE. I haven't dug much into what they actually do there. Here's their actual website or whatever. Okay, pretty cool, pretty interesting. That probably wasn't too helpful there. I do apologize. What was that other stock I wanted to look at there? Okay, Pfizer. So Pfizer, I should not own this stock, but I do, and I don't really recommend anyone else own it unless you want to underperform the S&P. And I want to underperform the S&P 500 with this name, so I picked it up. I bought this I bought it because the dividend is safe around a 70% payout ratio. And the main reason I bought them is for weight loss exposure. They actually just acquired Metsera for over $10 billion. It puts them as the top 10 weight loss prescription companies. And there's just so much future growth, I think, for that business. But that's all like future hopium. Here's the thing: if we go, I'll show you the right now numbers. If we go to Pfizer stock is literally the same price that it was in 1997. Like you get no stock price appreciation, but here's what you do get. Right now, they have a 6.6% dividend yield. Here's how we can tell if it's safe. We go right here to the net income. This quarter, they made 3.55 billion in net income. That's the same as 62 cents of EPS. What are the EPS projections? Actually, they've been constantly beating on EPS projections, but anyway, they made 3.55 billion of net income this quarter. Let's go see how much the dividend cost. The dividend cost 2.44 billion of net income every quarter. So they at the very least need to be making 2.44 billion for the past 3 quarters, and this was a one-off, but they easily make that. Like we can see the EBITDA right here, they're easily making that. So it's around a 70% payout ratio. It's not great, but mainly that MedSera acquisition, I really like. They also own a bunch of random other stuff, like Viagra and other weird stuff. But yeah, Pfizer partners with Yale Pharma for GLP-1 obesity development. Oh wow! So they're actually taking a stake. They'll receive 150 million, up to a 1.9 billion in milestone and tiered royalties. It's pretty cool. Anyway, that's Pfizer. You're buying them mainly for the dividend income. Don't expect much stock price appreciation. Thanks again for those 9 gifts there, OLP. If you got another stock you can look at, let me know. Hey, it's Catherine. Good to see you. Hope you're having a great day. Yeah, we'll do. We will too. Let me get to Rocket Lab real quick. We'll get to Rocket Lab and then we'll get to PSIX, and I want to get to all this. So why is Rocket Lab up on the day? It's because I'm about to share with you the craziest news I just figured out yesterday. Y'all aren't going to believe this, okay? So Elon Musk is going to, in 2026, IPO SpaceX at $1.5 trillion, okay? At a $1.5 trillion market cap. That's what he aims to. Did you know this? And this is facts. I checked this up, and Google's a massive on the investment. Google owns 7.5% of all of SpaceX. They used to own 10%, but after the recent looting round, but they literally own 7.5% all of SpaceX. I just did not know that. Like, that's so freaking cool as a Google shareholder, but it's worth over 100 billions of them. Anyway, let's get to Rocket Lab though. This one is one of my basically favorite space stocks, but the valuation is too expensive. But check this out. If we go to their space systems revenue right here, this is what you want to see. This is what I love. Revenue's up 36% year over year. After grew 81%. After grew 15%. So they're on a nice streak of growth. It's the first ever quarter where the space systems business was over 100 million in revenue. So that was great. And also their launch services. Let's see how that did year over year. That grew 95%. That's great news. I know they're also, I believe, doing some acquisitions of like Geost. Let's see. Neutron rocket development continues with delays, or launch services surged 95%, supported by 4 Electron launches and 17 new contracts. They have a backlog at 509 million, so yeah, they have a big backlog of orders. They are still losing a bit of money, 60 million in net income a quarter, but this top line growth, as long as they keep that up, the stock still should do good. But it's certainly really expensive, I think, to buy it here. The risk reward doesn't look great, but it's a small position. The momentum, especially with the SpaceX news, has just been great for them. Okay, Bull, please. Let's get to Bull real quick. This is Webull right here, and that's just this platform right here, publicly traded. So this literal fintech app I'm on is ticker symbol Bull, and I'm bullish on Webull because, as you know, they just added in crypto prediction market and like a subscription you can do. So I'm just more bullish than the analysts are, but they are expensive. It's not a cheap company. I wouldn't recommend this as a huge size position, but I do own them. The forward PE is a 74. I think it's lower than that according to my own little EPS projections, but this company is basically just is getting net income positive because that's why the forward PE is so high. I'll show you my position in them. I actually own them in my Robinhood portfolio in my Roth IRA. Here we go. I got not many shares. See, I don't really recommend you have this as a major size position just for right now. But I do own 50 shares of Webull. They have great top line growth. Sales are up 55%, 46, 32, making good net income. And with this, they're beating. They first really earnings report since the IPO, but big beat on expectations. I'm just really bullish, more bullish on them than the analysts expect. So it's just a nice, interesting growth company, copying the successful results of Robinhood, because Robinhood stock has been on an absolute tear. I do own Robinhood as well. I own so many fintechs. I own Robinhood stock. I own Futu, which is Moomoo. I got SoFi. I got Dave. I even got T. Rowe Price Group, but that's kind of a dividend play. What app is that? Oh, hey, all these apps are all in the link tree in my bio. Not sure which one you're talking about. This one's my favorite brokerage where you buy stocks on, the one I'd recommend. It's in the link tree in my bio, very first link there. Free brokerage, costs nothing. And it is an affiliate link, so if you go deposit like $100, we'll both get like some free stocks. Yeah, most useful analysis. That's what we do all the analysis over here. So PSIX, when you get the chance, let's do it that, man. PSIX. And I'll go quick here because I know I'm missing some. I want to get to like Cisco's cool. Axon's super expensive. Rio is an interesting like aluminum dividend play. So here's PSIX, another stock I own. And as much as I love that one, I wouldn't, again, not a stock I have as a big position. You wouldn't really want to have it as a huge size position, but I got 5 shares. The reason they gap down so much on their earnings report is because their margins are being squeezed, but the valuation is still so cheap that I think it's certainly not worth selling. It's not worth selling. So if we go down here, look at this. So the orange line's what the analysts expected. They beat on revenue, they beat on EPS, and they beat on EBITDA. Triple beat quarter. But if we go to their margins right here, like the gross margins went from 29 to 23. So here's kind of what that means. We go to the revenue's up 62, and the net income didn't grow as much. It's up 59. So the net margins did go down a little too. So that it doesn't scare me. I mean, these numbers are so great. They're making a lot of net income. Like they're net income positive every quarter. They're deleveraging like crazy. And that's incredible top line growth. I mean, 62, 70, 42. Forward PE is a 14. So I think that's fair for a company growing at that rate. 14 forward PE. Again, wouldn't buy too much of it. Who's funding the rocket industry? Yeah, it must be the government, JAXA, all the governments. I don't know. No, I don't love space investments. Like the data center in space, that will never happen. I just don't. I bet there was a poly. I actually looked that up today. If there was a poly market for a space thing, I would. Will there ever be data centers in space? I think no. Let's see. Let's do Axon right here. This is an interesting company, another kind of government tied business. Like the whole entire UK police force uses Axon's body cams and tasers and the webcams in the cars as well. So many U.S. police station forces, police stations also use Axon's tasers, body cams, and they also have like this cloud network. So, geez, let me sip my tea here. And also, in exactly 30 minutes, we get the FOMC meeting where they're announcing if they cut rates by 25 basis points, and that'll either send the stock market up or down a bunch. But yeah, the thing with Axon is they're barely making any net income. I wonder if it's from acquisitions, though. Actually, no. They do own Dedrone. It's the best drone defense company publicly traded, I think. Like, this is a stock I love, but the valuation is too expensive. The forward PE is a 450 forward PE on Axon. I love them, but software and services revenue surged 41%. Connected devices increased 24%. These are good growth rates. Net loss of $2.2 million was reported due to an increased operating expenses and margin pressure from tariffs. So they're struggling with profitability, and that makes them expensive. But I would love to own them meaningfully. Yeah, hey Jake, if you want to get this app I'm on right now, or this where you buy stocks on, this brokerage actually, it's in the link tree in my bio, that very first link there. My favorite broker. If anyone wants to get it, they're all these apps are all linked up here. Like Robinhood's the second link in the link tree in my bio. We will start, but this one is my favorite. Lowest fee, cost nothing, most useful, I think. Let's see here. I don't think the Boring Company is public. Yeah, another one that Elon Musk could IPO or something like that. Who knows? Let's get to Cisco right here. I remember when this company acquired Splunk. It's a cybersecurity company that I used to own, and now this stock is at an all-time high. Actually, let's see if that's true. Are they 2001 recovery? Ooh, no, not yet. Not the bubble, or 2001. I mean, almost at the $82. But anyway, This stock is honestly a great company. With the great yield, it's like a dividend growth name. Even if you buy the stock right now, you get an over 2% dividend yield, and they raise the dividend every single year. The forward PE, actually, it's a bit expensive. But well, 26 forward PE. That's cheaper than a lot of companies out there. But yeah, if we go to their security business or just security right here, if we let's see this on an annual basis. Yeah, look at this. One of the reasons why this popped up so much was from that Splunk acquisition. But yeah, that's really good growth on their cybersecurity division there. And they have also like the networking services, also other names. But if we just go to the net income down here, the after-tax net income, they made 2.9 billion net income after they paid 500 mil of taxes every quarter. So they're easily making 2.5 billion plus of after-tax net income a quarter. And that 2% dividend it cost 1.62 billion of net income a quarter. And since they have leftover money, they're even doing buybacks. They're spending 1 to 2 billion in net income a quarter on share buybacks right now. So the net income grew by 5.5, but the net income per share grew by 5.8, a little higher. Actually, they must have had a little dilution with stock. But anyway, there's Cisco for you. Congrats if you own that one. They've done surprisingly well. Nathan, do you day trade? I do not day trade. I if anything, I swing trade where I'll buy a company and maybe hold it for a month or less. But I don't usually buy and sell something the same day ever, or usually in like a week. But anyway, here's PayPal. Hey, what up, Nezzy? We'll do Meta too. GE Aerospace is a nice one. So we got to get to all these. So here's PayPal right here. Unfortunately, this one hasn't done too well. They're the same price as they were in 2017. The forward PE is an 11. So, or yeah, wow. So the current PE is a 12. Like that's like a commodity multiple, unfortunately. Let's see what the net income is though. So PayPal does make great net income. Easily 1.2, 1.3 billion of after-tax net income a quarter. Yeah. The top line growth has been a little slow. That might be why the multiples like that, like mid, low single digits, like 5, 1, 4%. This quarter was good at 7%. But they're making 1.2 billion net income a quarter. What's interesting is right now they're spending all of it on share buybacks. Look at the top here. They're doing 1.5 billion of buybacks a quarter. So they've literally bought back just in the past year 7% of the entire company, which is really interesting. And they just started paying out a dividend. You get a 0.9% dividend. They have around a like 12% payout ratio for it. So it's like a cheap value stock almost. It's like, it's not just PayPal though. So PayPal obviously owns Venmo. A very stock that looks almost identical to it is Cash App. Cash App is publicly traded under ticker symbol block XYZ. Look at them. Actually, this one's also the same price that it was in 2018. So, and yeah, Cash App is oh, wow. So that's actually on a decline right now. Anywho, looks like it's not just PayPal specific. Looks like their main competitor is also kind of struggling. Maybe they're just being out innovated right now by crypto, or who knows? And maybe it's just hard for the market to give them a high multiple. Do you own Iris Energy? It seems to be a strong data center, but I'm not sure. Yeah, hey, I actually do not own Iris Energy. Right now, 85% of this company's revenue is still Bitcoin mining, but they're converting their Bitcoin mining into hey, Tommy K, dude, that distracted me. Thanks for that. I didn't even know that was for the SpongeBob gift there. That's cool. They must have licensed that or something. That's like the official SpongeBob. Well, thanks for that gift there. But Iris Energy mainly mines Bitcoin, but right now they're converting. Basically, they own a bunch of GPUs in the data center, and they're converting these GPUs from mining Bitcoin to cloud server hosting, and they're getting major deals with, I think, like Meta. Let me see actually who they got the big deals with. Oh, well, actually, maybe we won't be able to find it, but they got some big contracts. Maybe the Microsoft Cloud. I don't know. Some sort of big name. But yeah, Nebius, CoreWeave, Iris Energy, Nebius, they all should like move very similarly. APLD. So let's do Meta real quick. So let's get to Meta, then we'll get to and then exactly 22 minutes we get the FOMC meeting where they're announcing a rate cut, and that should send the market up or down a bunch. So Meta, I do own them in my Robinhood portfolio in my main dividend only account right here. And on the day we're down 0.27, Yikes. And ooh, look at Meta. They're at a new intraday low right now. Well, thanks to Meta. Look at the current price is 644. I think we might have, oh my gosh, look, we bought a share 644.50 a while back. So it's at the same price. So that's great. But I don't mind. Our original cost basis was like 440 on this company. I don't mind dollar cost averaging up. Yeah, we're buying shares at 440, 450. You don't get much dividends on this company. This actually, I didn't, 4 quarters is a year. So this is a year and a half of dividend payments. We've been diamond handing Meta for a year and a half. But anyway, and I don't plan to ever sell Meta. Check this out right here. This is so insane. The forward multiple is a 22, for Meta. Yeah, hey, Tommy, we'll get to Lyft. But yeah, heck yeah. The forward P is a 22, and for Meta, I think that is super fair. We can see right here their daily active users are 3.5 billion, so pretty much half the world is on one of their apps a day. And why are we looking at the forward PE and not their current PE? It's because if we go to their EPS this quarter, their EPS is only $1. It says it's down 83% year over year. Remember, the EPS is just the net income, and the net income, well, per share, but the net income fell 82%, and this was a one-time adjustment. If we go to the actual operating profit, which excludes the one-time adjustment, that $14 billion tax charge, it was a record Q3. They made $18 billion, record Q3 profits, and record Q3 sales. First ever quarter where it was over $50 billion of revenue. Another thing being questioned on Meta is their AI spend. They're legit spending 20 to 25 bill of net income a quarter on AI and new GPUs, and they actually can't. For the first time ever now, Meta has a net debt position, and with their new Prometheus data center bond. So, but it's but the day Meta announced a 30% cut for their the whole gap up just got sold off, but they gapped up 5% this day on Meta announced a huge cut on their metaverse spends, cutting metaverse spend by 30%, which that's kind of not too popular right now. So I think the future is going to be augmented reality. I love what they're doing with their reality labs and their Meta Ray-Ban glasses. We can like scroll through Instagram Reels. There's like a little thing on Meta. But yeah, they own Facebook, Instagram, WhatsApp. They're just now introducing ads to WhatsApp and Threads as well. It has like the same amount of daily active users as X does. So yeah, Lyft. Why is Lyft down? We were actually looking at Uber. I will say, I think Uber is the much better quality buy over Lyft, sadly. Yeah, Uber's way cheaper and it's higher quality, but 35 forward PE on Lyft. Uber's at around a 24, actually 24, 25. So Uber's at a 25 forward PE. They're at a 35. But why? Actually, Lyft, I think Tesla, there's a rumor that Tesla could acquire them. That would be so synergistic for them. But why is Lyft and Uber both down massive today? Lyft, Uber, Instacart, they're all down massive. It's because of Waymo. It's because of Google. And this is why I like going on Google. It's like a hedge. But Waymo reaches 14 million rides. It's that autonomy robo-taxi service that Waymo does. And that's for the whole full year 2025 so far. They're doing now $450,000 or 450,000 people a week are paying for Google's Waymos, and that that's now a person that's not going through Lyft or Uber anymore. So that's kind of, I guess, being priced in is going to hurt their future revenue. But here's the numbers right here on Lyft. They just now got profitable. Check this out. So you probably want to do like a 2-year out forward multiple. But yeah, like if we zoom out to the previous year, they were losing money every quarter, but now they're making net income every single quarter, and they have actually missed every quarter for the past 3 quarters on their top line expectations. But they have been beating on net income and assignment. So yeah, Lyft is interesting. I sadly think Uber is the better buy here. All right. Hey, Monkey D. Luffy too with the SpongeBob gifts again. No way, dude. I appreciate you, Luffy. He says, I use all 3 almost daily. Oh, hey, what's up, Luffy? Basically pre-recorded. Yeah, hey, this is definitely pre-recorded. Yo, by the way, the FOMC meeting is in exactly 20 minutes. So in exactly 20 minutes, the market's either going to gap up or gap down a bunch. So we'll just look at some stocks in the meantime. All right. Buy some Uber. Yeah, I do you have any good? Whoa, what up, John? So yeah, here's Uber as well. So it's not just Lyft that's being hurt today. Look at Uber right here. Uber's down 6.6% just on the Waymo taxi news, unfortunately. Yo, sorry if I don't get to all the stocks right. I am a little behind. So I do apologize there. I want to get sorry if I missed your stock there. Um Okay, what up, YouTube agent? What's that? You were a bot there for a second. Okay, let's get to. Sorry, got distracted there. Lulu, what's up? And Eric said Iron Mountain. You know what? Let's cover Iron Mountain. I do own them. They're actually, I bought them in my Weeble portfolio right here. This is a REIT right here. A REIT is just a company where 90% of their assets are real estate, and they are a triple net lease, mainly data center focused REIT. So they have a 4% dividend yield. So that 4% dividend yield, it's abnormally high, but it's because they are a REIT. And check out the stock price. Like this is the 2019. This is 2019, right? Oh my goodness. Here, here's the 2019 price right here. The stock was, 25 bucks, and I just think it's like one of the best performing REITs out there, and it still has a good yield. Now, one of the reasons it has done bad recently is because on this day a short report came out around this stock, like Gotham research, like did a short report on them, but then a bunch of like Wells Fargo analysts came and defended that. So I bought the dip on them. So here I'll show you why. If we go over here, global data center business right here, like these year-over-year comps look great. 33%, literally new record. It's never been over 200 million before. Look at that. Like in that, it just new record every year recorded. Then there's the corporate and other. Wow, it's up 46% year over year after grew 85, also to a record over 200 million for the first time. And then this is their slower growing like global records and information disposal kind of business where they send like armored trucks and dispose of all the paper and stuff. But yeah, anywho, I like Iron Mountain. I own them. What I like about them is they have a rule where they keep their dividend payout ratio in the mid 60%. So pretty cool. MNTS with recent space news and Musk. Let's see, Momentous. Okay, yeah, we're not going to check out this company. Yeah, this is some microcap. We don't cover these kind of stocks here. If you look in the top right, the whole company is worth $23 million. They're at an all-time low. Let's see, almost for sure bankruptcy here. Please don't touch this one unless you just want a short-term swing trade this for a quick buck. But this is never the kind of stock you'd want a dime in hand. I mean, remember, just think about this logically real quick. Not trying to be bearish, but the whole company is worth $23 million. So you could literally buy the whole company for $23 million, buy it at that valuation. So you buy the whole company for $23 million. Here's what you're buying. You're buying a business that literally just in the past 3 months, just this quarter, lost $11 million, has half the market cap. Now it starts to make, and not even mention the quarter before, another 6 million, 6 million, 11 million. So you're already, and they have no revenue. The revenue is 100, 200K. So no wonder super leveraged balance sheet as well. No wonder the stock's at an all-time low. But yeah, the space news today created a nice little momentum, but it's a tough one to trust. All right. Do you think we get a Santa Claus rally? I hope so, Agent. I sure hope so. Start small and compound. Yeah, exactly. Stocks aren't get rich quick. In my opinion, here's how it should be. You just want a 10% CAGR, and that's what the S&P 500 delivers. Most investors and hedge funds cannot perform the S&P, so I really recommend have the S&P 500 or the QQQM as the backbone of your portfolio. Then you play around with your own individual strategy. Buy individual stocks that love, and use that are, in the S&P 500. Like I've picked McDonald's, Meta, Google, Constellation Energy, Amazon, Coca-Cola, Consolidated. So Weeble, I like. So, but let's see here. Does CareDex? Yeah, hey, I don't know what that is, man. If you have a stock you can look at, give me the ticker symbol. I don't know what some of these are here. I've never heard of that. Let's see here. Think Microsoft will keep trending down. No, in the long run, it may be short term, but Microsoft is an absolute freaking monster company to never sell. One of like the safest bets out there. Wow, Microsoft's down 3% on the day. That's an odd. I wonder if there's anything like specific that just like caused that. But this could be a buy the dip opportunity. The forward PE on Microsoft is a 29 forward PE on the our world's second largest company, or $3.5 trillion company, basically AI toolkit of the future that every company in one way or another uses Microsoft. I mean, they make literally 25 billion plus of after-tax net income every single quarter. So it's pretty insane. They have a better credit rating than the U.S. government. So Microsoft is more likely to pay off their debt than the whole U.S. government. They're just a never sell. Their Azure cloud, their Office products stuff. So, okay. Bought some Warner Bros. Discovery at 27, easiest 10% of my life. Yeah, dude, Warner Bros. Discovery is being bid up by, originally Netflix was going to buy them for 82 billion, but then Paramount Skydance announced a $106 billion deal, or maybe it was 130, or no, 108 bill. Paramount Skydance launches a $108 billion hostile bid, and look at the current market cap. It's 73 billion, or I think it was around $30 a share. So that includes the debt or whatever, but it was around $30 a share was the acquisition price, and it's right at that. So there's not much more upside from here, I don't think, but congrats if you made money before today. What happens is, hey, Scott, if you want to get this app, I'm on this actually a brokerage. It's in the link tree in my bio, that very first link there. My favorite brokerage, lowest fee. It's an affiliate link, full disclosure. So if you go and like deposit $100, we'll both get like some free stocks and stuff. Yeah, hey, try not to spam in the chat here. Hold on here. We'll try and get to all these like Zeta and stuff. But yeah, here's Goldman Sachs right here. Wow, look at just a boring bank. Goldman Sachs, JP Morgan, I know is pretty close to an all-time high. But yeah, Goldman Sachs, what's their dividend yield? So if you buy the stock even right now at an all-time high, you still get a 1.5% yield. And look at how they raised the dividend monstrous every year. Went from $5 to 6 to 9, 10, 11, and only the payout ratio for the last full year was a 29%. Well, let's go see if there's any specific news down here. Goldman Sachs to acquire Innovator Capital. Goldman's, okay. Let's go see to the net income down here. This is nuts. The growth rate specifically, they're making easily $4 billion if you average it out here of after-tax net income every quarter, up 37, up 22, 15, 104. Incredible bottom line and top line growth. Top line's growing double digits. So just a nice bank. And JP Morgan as well is also doing great. Like these boring just banks are doing great right now. And they still offer nice yields. The forward PE is a 14 on JP Morgan. Well, that's normal for a bank. They shouldn't trade much higher. Blackstone. Hey, yeah, what's that Blackstone ticker symbol? Is it like, I know BlackRock is BLK. Well, I'll check them out too. Okay. Chipotle. You know what? I wanted to get Chipotle like last stream, but I never did. So here's Chipotle right here. A lot of the grocery stores are getting hurt right now, but the forward PE is a 29. That might be fair for a Chipotle. It's finally somewhat reasonable. It was unreasonable up here. It was at like a 40 to 50 P. But if we look at Chipotle stock, it looks pretty much like all the other restaurants for the past year. Like look at Wendy's, for example. Obviously not the same customer, but I mean, like Wendy's is at a freaking like all-time low. Jack in the Box, this is so sad. I mean, pretty much all-time low on them. But Chipotle, I think, is in the best position if you're going to buy the dip on any of them. Buy the quality name Chipotle because check out the net income they still make every quarter. They're easily making 300, 400 mil in net income a quarter, but the net income is negative year over year. Actually, look, the sales are positive. The revenue, the sales are up 7.5%, but the net income fell by negative 1%. That means their margins are being squeezed. It's the whole industry is experiencing this, but if there's a rebound, I actually prefer McDonald's the most, but Chipotle's a good quality second. It's finally at a somewhat reasonable valuation, still maybe a little expensive at a 29 forward PE, but it's not the worst one out there. Okay, let's do BX. Black, that's it. Yeah. Thanks for that, Edward. So Blackstone, yeah, forward PE is a 14. So that's cheap. You kind of like I think the banks traded that, but this is more like a BlackRock asset manager. I know they're in like real estate. Well, let's just see. So yeah, private equity, real estate's 30% of the revenue, credit and insurance. How's that doing? I didn't know they were in. Look at the annual growth on just their credit and insurance business. I mean, just been straight up. I believe it. So anyway, if we go down here to the net income, they're making, it said this was a little one-time adjustment to their net income because the forward PE is a 14. So I'm assuming there's some sort of one-off expense here. Let's see if they did acquisitions or no. Or anyway, they're doing 1.5. We'll call it 1.4 bill of after-tax net income a quarter. Well, the dividend cost 1.3 bill. They are doing buybacks every quarter, like 100 mil of buybacks a quarter. Anyway, Blackstone's certainly interesting. Looks like the revenue did fall 15%, but that just might be from the cyclical insurance thing because the other growth, it's a hard comp. It's 139% growth, 44. So interesting name there. They have a nice dividend too. Yeah, hey, what is CareDex? Is that a stock? Give me the ticker symbol and we can maybe check it out there. Just try. Yeah, hey, Mel says Rich Tech. Yeah, hey, this is Joe, bro. Yeah, this is not a stock you'd really want. This is not the kind of stock you buy and never sell, in my opinion. Like, if you're looking for like a real robotics play, like if you want, like, if you're like, I'm a believer in robotics in the future. I want to buy a robotics company. This one's a good momentum name to swing trade, but it's a bad company, not a stock you buy and never sell. If we go to the like this, it's a startup. I mean, if we go to the revenue's like a million a quarter. You know, um, the revenue is literally a million a quarter, down 18% year over year. Like the revenue was higher back in 2022. So this isn't great revenue numbers. They're losing net income every quarter. Now they did just fortify their balance sheet by, diluting you a bunch, 100 mil. What's the market cap? Okay. So they diluted you by 15%. So you own 15% less of the shares, but they did the smart thing. Anyway, this is a momentum company, not a real robotics name. If you're looking for a real robotics company, though, check out Symbiotic right here. They're on a nice dip right now after they rose some cash up here, but they have over 1,500 registered IP and patents. They have real revenue. It's not a company doing $1 million in revenue a quarter. Check this out right here. Sales are growing very nicely. 10% after grew 44%, after grew 77, after grew 315. So they're on a nice streak of revenue growth. And they're actually helping out Walmart with their warehouse logistics. And, Walmart, Amazon, those are the most to benefit from robotics. Check this out. Walmart actually loves them so much that they're the second largest shareholder. Walmart owns 13% of the company. So Walmart wants to see them do good. Hey, Nick, I got you. Can you analyze NN Group from the Netherlands? Let's do it, Umit. Let's check it out. I don't actually know if I'm going to be able to find that. Actually, you know what? We did find it. Ha ha ha. Let's go. There we go. There we go. Hey, Nick. So you now can mute people. Thanks for that. All right. So anyway, here is some Netherlands company, and look at that. I think that's an all-time high on the stock today. Obviously, it's an ADR, so that's why there's like no volume on these candles here. But let's go look at their actual numbers. So we're going to convert the currency from euros to USD just to get a better picture of what the numbers are. So Netherlands Life. Oh, it's like an insurance group, maybe like life insurance. Let me check right here. Financial service company. Okay, so retirement services, pensions, insurance, banking, investments. Okay, interesting name there. So Netherlands Life, Netherlands non-life insurance, so other kind of insurance products, Insurance Europe. So let's go see how the sales are doing. This is from 2019. So unfortunately, we don't get their income statement. Do we get yeah, this is so weird. Maybe it's just because I guess we do get EPS estimates, I guess. So are these updated? Yeah, so I guess the EPS estimates are for the full year. So because they're a European company, they don't report in quarters, but I wish I could give you more thoughts on them. We actually can't really look at their financials. We do have the balance sheet here, but we don't have any other metric. I do apologize, but hopefully that was somewhat helpful. Is Google an all-world ETF in good beginning? Yeah, Google is a great never sell stock. I do own them. It's tough to buy meaningfully today. Like if you want Google as 5% of your portfolio or even more, you don't make it that today. Like it has gone up a bunch, but it's such a quality company that it's still worth buying like a little bit of even today. And every time it's just on a dip, you buy a little bit more. Like Google owns YouTube. They own Waymo now. Waymo just took crazy market share from Uber and Lyft. But I figured this out yesterday. All right, found this out. SpaceX is about to go public, well, not about to, but in 2026, SpaceX is going to go IPO at a 1.6 trillion valuation market cap. Google owns 7.5% of SpaceX. I kid you not. So that's crazy value for them. Yeah, they own YouTube. And they literally own Android, like the Google Play Store, search ads, like quantum chips. TPUs has been huge for Google. Hey, good time. Good to see you, man. Appreciate you. Zero said NEE. Yo, this is NextEra Energy. This is a regulated utility. I actually just bought Southern Company, ticker symbol SO, instead of NextEra Energy. But check out the yield here. You get a 2.7% dividend yield on NextEra Energy. It's super safe. They own Florida Power and Light. Pretty much the whole state of Florida for utilities there. Check this out. Florida Power and Light, just in Florida, does $4 to $5 billion of revenue a quarter. which is just insane. And they made great net income a quarter. They had a little one-time adjustment. It says right here Q1 they only made 400 mil. Well, they actually made like 1.5 billion or more. But they're easily making, call it 1.5 to 2 billion of net income a quarter. See how much the dividend cost. The dividend cost 1.1 billion. So safe dividend there. They're also just opened up a nuclear reactor, I think, with Google. Yeah, check this out. The key event number one here, NextEra Energy expands partnerships with Google and Meta for clean energy and data centers. Pretty cool. NextEra Energy to acquire Symmetry Energy Solutions to enhance natural gas. Okay, NextEra Energy revises EPS and dividend growth targets through 2035. The company projects at least 8% annual EPS growth through 2035 and expects 10% annual dividend growth through 2026, followed by 6% for 2027, 2028, subject to board approval. Okay, so updated is adjusted EPS, narrowing 2025 range. Ooh, they actually is a bit of a narrowance. It originally went from on the top line $4.02 to $3.70 on the top end. Anyway, there's any E. What app do you use? Yeah, hey, if you want to get this app I'm on, this is actually a brokerage, my favorite one. It's in the link tree in my bio, very first link there. It is an affiliate link, full disclosure. So if you go and deposit like $100, we'll both get some free stocks. All these are as well. You know, same with Robinhood. Robinhood's the second link in the link tree in my bio as well. All the apps I'm using are up there. You can just type it into Google. It's just a broker called Robinhood or anyway. Yeah, this one's my favorite one though. Very first link in the link tree in my bio. Costs nothing and it's free, no commissions or anything, and it's the most useful for like tools and stuff. You know, you get the Nancy Pelosi tracker and all this other kind of fun stuff. But yeah. And we get the FOMC meeting. Here's another cool thing. In literally 5 minutes. Oh, 4 minutes from now. Oh my gosh. I'll show you the actual numbers right here. There's so much cool data we get. But look at this. This is December 10th, the FOMC meeting. There is an 89% chance of a 25 basis point cut in 4 minutes. 10% chance of no changes off the Fed dot plot. But anyway, and watch out because in literally 4 minutes, I kid you not, stay here because the market's either going to rocket up or rocket down. And that's kind of why the market's kind of been flat for the past week. We've been waiting for this FOMC meeting. But yeah, usually it moves on also the comments that Jerome Powell has to say. So yeah, we're kind of just waiting. We'll look at like one more stuff. We got 3 minutes to go. You know what? Let's do a popular one. And Good Time said Netflix. Let's do Netflix here. So wow, $93 on Netflix. Look at this. So I honestly think Netflix it's worth starting to nibble. You know, don't buy it meaningfully, but start to nibble. Hey, Adrian and William, good to see y'all. But the forward PE, Netflix literally trades at 30 times next year's net income. But why has Netflix specifically been so bearish recently? That's because Netflix acquired or sent in a bid to buy Warner Bros. Discovery for $83 billion. But now Skydance or Paramount is announcing a $103 billion acquisition. So if Netflix wants to outbid them, it's going to be even more decretive to their EPS, and it's kind of just being sold off. But all that noise aside, this is a great company at a 30 forward PE. That's so fair. 30 forward PE, you know, they have literally 300 million premium subscribers. Their ARPU, their average monthly ARPU is $11.69 per month per user. Yeah, if you want to get this app, it's in the link tree in my bio, very first link there. It's a brokerage. But yeah, they're easily making, look at this, 2.5 to 3 billion of after-tax net income a quarter. You know, they made 2.5 billion after paying 400 mil of taxes, you know, and same with FCF, which is free cash flow, 2 billion plus. And so they don't pay a dividend. So they're doing share buybacks and just investing in the future, investing in their own content. And since they don't pay dividend or anything, they can afford to do something like spend a freaking $83 billion to buy Warner Bros. Discovery. Wouldn't that be kind of cool to see like the Harry Potter stuff and all that on Netflix? I don't know. But I honestly, I wouldn't buy crazy yet, but start the nibble at a 30 forward PE. Did you buy anything today? Actually, I did a nibble. Again, in this environment, it's really kind of tough to meaningfully buy. You know, if you want to buy something, don't just spend all your money at once, slowly dollar cost average. I bought fractional shares. I'm never scared to do this. I bought 0.1 shares of Ferrari today because I didn't have too much cash left over in this account. So yeah, I bought 0.1 shares of Ferrari. I never mind doing that. So yeah, literally less than 60 seconds, the market's either going to rocket up or rocket down a bunch. You know what? Should we look at the individual QQQ ticker symbol? Now let's see what happens. Literally less than 30 seconds. We'll tab back into there. But yeah, Apple, good to invest in for a beginner. Absolutely. You know, most investors can't outperform the S&P 500, and same with hedge funds as well. Most hedge funds can't outperform the S&P 500. So, okay, here we go. Let me pull up my Webull portfolio because this is kind of like my risk on account. All right. Yeah, here I'll do a portfolio update as well if anyone wants to see. So yeah, here's our Webull account. All right, here we go. It's 11:59. It should be out in literally seconds. So I've lost the spy. Where'd the QQQ go? All right, here's the QQQ. Guess we'll see what happens right here. Um, Longest minute ever. Hey, no way, yo! Shout out to the homie Good Time on the YouTube stream, dude. No way with the $1.99 super chat. I didn't even see that, dude. Thank you so much for that gift there. I really do appreciate that. All right, just hit two. Um, I guess the market. Maybe I overhyped. Maybe I overhyped this. Oh, well, hey, there's a nice little green candle there. Maybe I oversold how hyped this was going to be. But hey, at least it's not down. Guess we'll wait a couple minutes. Usually the market needs a minute to really digest what the actual things were. Maybe we can check the intelligent Webull comments real quick. We are about a moon. So I'm guessing the Feds did announce like for a cut. Look at that. The Qs just went positive on the day. New intraday high. Go check your portfolio. You're probably making money. But yeah, check that out. And we'll come back to this in a minute here. You know what? Should we look at Apple stock? Yeah, I saw a few about Apple. Let's do Apple stock. Yeah, 2 p.m. This was the exact moment the Fed announced the 25 basis point cut. We knew this was going to happen with, if we go down here, this was pretty, I guess, not, but there was an 89% chance of this 25 basis point cut. This is today on the December 10th meeting. The next meeting is January 28th. We can see that right now odds, another 25 basis point cut is going to happen January 28th with a 70% odds right now. So anyway, let's go let's go check on the Qs over time. Hopefully, we also, here's what's going to happen. We're probably going to trend down for a little bit until Jerome Powell talks. So in 30 minutes, Jerome Powell is going to talk, and he usually says, this always happens. I've watched Jerome Powell talk like a dozen times on this meeting, and I might actually end the stream to go watch it live. And I would love one day to watch the meeting while on the live stream. But he always says something that either rockets the market up and down, and it's just a volatile day. So if you wanted volatility, it's here. So let's look at Apple real quick, and we'll look at some other stocks too. Heck yeah. Then we'll check back on the market, but we just look on here for great quality stocks to buy. And Apple's a phenomenal company to just buy and never sell. Here's why. Here's their smartphone market share. Apple sells smartphones. They even make smartphone chips, 14% smartphone chip market share. But iPhones are literally half their revenue. The iPhone sales have been flat since 2022. Look at that. It's actually lower than it was. But if we go to this is the most valuable part of Apple is their services business. This is iCloud and the App Store. So whenever you go spend literally $100 in the App Store, Apple keeps $30 of that. It's literally a royalty, service and device developer royalty, they call it. And so that is their highest margin business, super high margin every time they just collect that commission. So that business is at over $100 billion of annual revenue for them. Phenomenal. Then of course they have like their wearables, their Mac, their iPad. And back then, way back here, they were super affected by tariffs. I never knew this, did y'all? But they were super affected by tariffs because look at this. I always thought it was higher, but only 36% of Apple's revenue comes from the US. Well, it's their largest segment, but it's almost like it's all around the world company. Europe is 26% of all their revenue, China's 15%, and all the other countries as well. So look at, in the US, we don't allow Chinese phones because they're all spyware. But why does China allow Apple phones in China? Because they're so good that there is even Apple, they can't even access the back door. Apple can't even get your data, but they're that safe. But check this out right here. This is their after-tax net income. Well, actually, let's blend that. Yeah, that is. Apple's easily making $100 billion in net income a year. They're making easily $25 billion of after-tax net income a quarter. And what is Apple doing with all that? They have you're not going to believe this. They have the largest share buyback program of any company in the world. If you look at the very top here, what are these negative numbers? They're spending 20 to 25 billion of their after-tax net income a quarter buying back their own shares. And what does share buybacks do? It literally, in short, it forces the stock to go up. But if we go to it makes the EPS go higher. If we look at the net income's up by 86%, but the net income per share is up by over 90. Again, the EPS growth rate and the net income growth rate should always literally be the exact same. The only thing that changes it is if they dilute you or if they buy back shares. And when they buy back shares, it makes the EPS go higher, which makes the PE ratio go lower. It gives you more ownership in the company, makes the cost of the dividend go down, and so it just makes the stock go up. Like they literally bought back 7% of the shares this year, 5% this year. It's just so accretive to right now stock price. They also have a nice dividend growth. 0.8 0.37% dividend, but the dividend potential in the future for Apple is crazy. So yeah, that's a good never sell. Yeah, hey, Luffy says Netflix and Uber are a good deal. I honestly do think Uber is a pretty good deal right here. Let's see, 24 forward PE. The reason Uber is down 6.3% of the day is because of Google, actually. Google announced their and how successful the results of Waymo have been. Let me check the market real quick. We're almost green. Look at that. We're almost green on the day. We're down 0.0% right now on the Fed cut right there. The Fed did cut interest rates by 25 basis points. And let's actually check out the Roth IRA. How's that moving? Well, not at all, really. Actually, let's check out our risk on portfolio real quick. Is anything moving? What's moving on the... Oh my goodness. There we go. What's on the day here? The day. Actually nothing really is moving. I mean, SoFi's up 1.9. Dave, what's down? UiPath is down. Sprouts Farmers is down 3.7. T-Ro's down 3.7. It's like a mixed bag day. All right. Yeah, Uber's it looks like a pretty good CEO. Hey, Victorianus, how's it going? 25 basis point cut, let's go. Yeah, silent, let's go, man. Apple needs to dive into AI. Well, Apple is actually being rewarded for not spending so much on AI right now. Lucas said Coca-Cola. Yo, Netflix as well, I think it's a great deal. Let's say, you know who owns Coca-Cola is actually the homie Warren Buffett. If we go to Warren Buffett's portfolio right here, his largest holding is Apple, and that's always been the right move. You know, American Express at an all-time high, but his fourth largest holding, or 8.9% of his portfolio, is in Coca-Cola. And this is a company that you buy this for the dividend. You don't buy the stock expecting to outperform the tech-heavy S&P 500 because you won't do that. But here's what you do get. You get a very safe, call it 3% dividend. So you get a 3% dividend. They raise the dividend every year to beat inflation. And so you basically get 3% dividends and around 3 to 4% stock price appreciation every year. So on average, total return, if you buy the stock right now, you should just skip for the rest of time. I'm going to say around 7% of your money back total return, 3% dividends, 3% stock price appreciation, and maybe 0.5 buybacks or something. But yeah, Coca-Cola is pretty cool. Great. Just safe company that you can trust. It's somewhat recession resilient. And I don't own Coca-Cola. I actually own Coca-Cola, the bottler. It's called Coca-Cola Consolidated, the number one bottler for them. And they've done so good. Look at that. I mean, you wouldn't expect it. Actually, one of the best performance stocks like ever. I had to buy the dip on them. Okay. Hey, Seuss, no way. The legend Seuss is here. Good to see you, man. Are you holding Sprouts Farmers for the long term? Absolutely. You know what? Let's cover Sprouts Farmers real quick. You know, this is a company I love for the buybacks. And another reason Sprouts Farmers market is down is because of Amazon. Check this out. Or hey, this was 46 minutes ago. This was before I started the stream, so I've been knowing about this. But shares of rival slip as Amazon expands same-day grocery delivery. Oh, you know who it hurt the most? Let's check out Instacart right here. Instacart is down 6.5% on the day. I guess they've had what is this? This app is telling me that there's a double bottom. Okay, but yeah, whenever Amazon, you don't want to compete with Amazon. But anyway, Sprouts Farmers Market's like a competitor to Whole Foods, and it's like a more healthy grocery-oriented store. But the valuation's so cheap, I can't pass this up. Sorry, little sick, but we're good. A 15 PE is fair for them. And especially for grocery stores, you really focus on the net margin. And they have had so much net margin expansion. Like they're not falling because of it's falling because of the sentiment's not in their favor. Not because the earnings were bad. Well, let's see. Okay, so they did slight miss on revenue this quarter. They missed on revenue, but they beat on EPS and they beat on EBITDA. So that actually means they're expanding margins. Basically, I love Sprouts Farmers Market because they don't pay a dividend. And because they don't pay a dividend, they literally buy back 3 to 4% of all the shares every year. They're a share buyback monster, I like to call them. And that's why I do own them. And let me show you how down bad we are on them. We are down, it's actually our biggest loser right now. We are down 38% or $480. Drop a like on the stream for me. But yeah, I'm starting to, nothing's scaring me to sell out of that. Whoa, Comfort Systems, what'd they just do? Probably just from the FOMC thing. Wow, that's close to an all-time high on them. That's great news. Powell Industries is having a great day. Yes. So, wow, the Feds just cut interest rates by 25 basis points literally 5 minutes ago. Whoa. Hold on here. Something just happened in the past, just 1 minute here, though. That's crazy. Look at that. Anyway, Let's look at some more of the stocks here. Adobe. Oh, thanks for bringing up Adobe. You know who reports earnings today? We got a lot of, well, two companies, Oracle and Adobe. We're not going to be streaming for it, sadly. Oh, Costco is post-market. Okay, I thought they were pre-market. So wait, that's tomorrow. I'm stupid. So here's today. Here's Wednesday. Oracle and Adobe are the two main companies. Is anything on my watch list on here? Yeah, only Adobe and Planet Labs. I guess forget what they do. Actually, they've done really good. Yeah, Oracle and Adobe should be two fun names, and maybe we'll move Google and Amazon on Oracle's cloud numbers. Oracle has like a 6% market share. Amazon is like a 22. Google Cloud is like a 9, but it's like a pure cloud play. Nathan, can you ask Jerome Powell if he could lower rates by 1% next time? I got you. Just let me call him up. Let's actually go over Adobe. Well, it's almost not worth it because if you buy the stock now, it's pretty much betting into earnings, but let's go see. So here's Adobe right here. They're a super cheap company, or the valuation. They're trading at 19 forward PE. So why is Adobe so cheap right now, and why is the stock collapsed? It's because of the AI thesis hurting them. Adobe, like they're saying in 10 years from now, will we need Photoshop and After Effects as much? When like I just created this great logo in Gemini and ChatGPT, but I'm a believer that humans though will always need the final touch on art. But that negative sentiment is what I think is hurting their PE ratio, and it's the reason the PE used to historically be at like 40. Now it's at 21 right now, and the right now numbers are good. Like their right now numbers aren't being hurt, but it's the future sentiment, and that's why I potentially think it's worth nibbling on this stock. I would probably just like a nibble. I wouldn't own it as a major size position just because the risks are like gonna probably somewhat be real, but. Look at this net income. The right now numbers are phenomenal. Easily 1.7 to 1.8 billion of after-tax net income a quarter. Like that's after they pay 3 to 400 mil of taxes, because the operating profit is over 2 bill a quarter, and not just net income, but free cash flow as well. Well over 2 to 3 billion of free cash flow a quarter. So what is Adobe doing with all this free cash flow? Well, share buybacks, because they don't pay a dividend. If we look at the top here, this is my favorite part. They know the stock's cheap, so they're doing 2 to 3.5 billion of share buybacks a quarter, and that just look at this. The net income grew by 5.2, but the net income per share grew by 11.1 because the share part of the ratio they bought back over 6% of all the shares just in the past year. So, wow, 6% of all the shares, pretty cool. 19 forward PE seems like a cheap value play, And a long time ago they tried to acquire Figma, and EU regulators didn't allow it, and they had to pay Figma $1 billion. And now Figma just IPO'd as kind of another. They move very much like Adobe does. Okay. Good buying op for the week. Yeah. Hey, actually, I bought. This isn't a great buy, but I bought a 0.1 fractional share of Ferrari today. But I think Uber and Netflix are good nibbles today to start the small position. Uber is being hurt because of Amazon's expansion. Or no. Google Waymo expansion. Okay. Hi, Oracle's looking good. You think of the current price? Oh, what up, doctor? So Oracle, let's look at them because they also report earnings today in literally 2 hours exactly. They're either going to go up or down a bunch. So we can actually see what the analysts have forecast. I don't love them because they're a pure cloud play with a lot of debt, when I'd rather my cloud exposure is AWS and a Google Cloud. So this one's a pure cloud play, but they're in a lot of demand. I don't love also that they have a high payout ratio, a high dividend yield that suffocates their net income. They make $3 billion net income a quarter easily, but $1.5 billion of that gets eaten to the dividend, and they have a lot of debt to pay, and they just issued a lot more debt, and that's actually being questioned right now. Look at that. Oracle to release Q2 earnings amid AI expansion and debt concerns because a $300 billion OpenAI. Oh, wow. So they had a $300 billion OpenAI contract, but concerns over rising debt levels, which reached $111 billion in August. They have like 10 years plus of debt to pay, or based off their current net income. And that's the dividend too. So anyway, what's the forward multiple? That's the big question. The forward PE is a 41. Oracle of 41 forward PE. It's more expensive than Amazon and Google by far. I don't know if I just love this one individually. But I guess we'll see what happens after earnings for now. It's still expensive, but it definitely deserves a expensive multiple because I just know that they like their contracted backlog like last quarter like tripled. Like it was crazy. I think from OpenAI. So it's an interesting one. 41 forward PE. We'll see what happens in the earnings. We want more coverage on that. And hey, do you think it's gonna Nvidia? You know what? We haven't looked at Nvidia at all today. Let's cover them real quick. What's it's a cheap company. 29 forward PE for Nvidia. I mean, that's insane. I mean, well, it's because of the growth expectations. I mean, here's the EPS growth expectations. It's going to literally go from 76 cents to $1.50, or next quarter is supposed to be $1.45 and then $1.56, and they always slightly beat on their net income expectations as well. But if another company can pull this off, they also deserve to have this sort of crazy stock price appreciation. I wouldn't be shocked to kind of see Nvidia go higher. Why is all this drawn here? That was a long time ago. That was the tariff April dip. But they made $32 billion of after-tax net income this quarter after they paid basically $4 billion of taxes. So they made $31 billion of net income this quarter. The margins are insane. The 56% net margin on NVIDIA. I think NVIDIA, it's a tough double from here, but I think this company will still give you 10% of your money back a year probably and have S&P, or just do what the S&P 500 does, if not slightly better. If you look at the current market cap, it is at the very top right. They're worth 4.5 trillion. So for you to double your money, they have to be worth, 9 trillion. It's a tough double. I see easier doubles in the whole NVIDIA ecosystem, but that one will still give you, I think, S&P 500 beating returns. Yeah, some other, I guess, NVIDIA beneficiaries like Comfort Systems, Powell Industries, Amphenol is a super beneficiary, but a lot of these have run up kind of with NVIDIA's crazy stock price appreciation. Constellation Energy, the number one nuclear play utility, they literally own 33% of the U.S.'s nuclear reactors. Yeah, the market just rocketed up on the Feds cutting 25 basis points. New intraday high right now on the Qs. So not too shabby. All right. Cavco's moving up. Yeah, heck, dude, Cavco, that one is interest rate sensitive. They make small modular homes, or not modular homes, like just small manufactured homes. We're finally positive on them. Hey, we're up 0.69% on them. Okay. So what would I want to look at here? Or Qualcomm. Okay, Qualcomm, this is an interesting kind of royalty smartphone chip company right here. I think they own like Snapdragon. I don't remember exactly. So look at the forward PE, it's a 18. So the forward multiple is really cheap on Qualcomm. And why are we looking at the forward PE and not their current PE of a 36? Before today it was a 15. Well, it's because this quarter they had a one-time adjustment. You see Q4 says they lost $3 billion in net income this quarter. Net income is EPS, so it says they lost $2.89 of EPS. They didn't actually total one-time adjustment from like an acquisition or something. Same kind of deal that happened with Meta. The core Q4 business still made like $2.5 billion in net income a quarter. But here's what I found really cool when I was reading the Morningstar research right here. Check this out. The number one line here says Qualcomm collects royalty revenue or income on the majority of the 4G and 5G handsets sold, as it holds many essential patents used in these networks. So I guess they're collecting some sort of royalty stream revenue. So pretty interesting. And it's a great dividend growth company, I think. If you go to the dividend, you get a 1.9 or call it 2% dividend because they raise it every year. So Qualcomm's a cool name. I know there's just been maybe increased competition, like with Apple making their own smartphone chip. You're like, dang, this stock is actually the same price that it was in 2021. So it has been an underperformer, but it's starting to recently have a nice little recovery. All right. Hey, Tommy One, good to see you, man. He says, Visa, you know who owns Visa? Nancy Pelosi owns some Visa. Here's her portfolio. She owns CrowdStrike, Netflix. Nancy Pelosi owns Netflix. So, hey, why not? Hey, Netflix is actually the risk to reward on Netflix is good to nibble right now. I'd like to start, maybe just buy one share right now, and then only when it falls another 5%, only then, or 10%, only then add more in steps as it tranches down. But anyway, Visa is a great never sell name. The forward multiples are 26, so that's very fair for a quality name as Visa. The small little micro credit card transaction fees that are slowly bankrupting us are making Visa a lot of money. We go to their net income, they're legit making easily 5 billion plus of after-tax net income a quarter. And what is Visa doing with easily 5 billion of after-tax net income a quarter? Well, they pay a dividend. The dividend only cost 1.1 billion. So what are they doing with the rest of our money? Share buybacks to an insane degree. They're doing 4 billion of share buybacks a quarter, which just is so great for the stock. So Visa is a great, phenomenal, never sell. Now, one thing, Visa, like this day specifically, there was no earnings report this day, but they have been gapping it down on this day from stable coin partnerships from like Walmart and other companies. So, but Visa came and defended this, but this is what's hurting their current multiple. This is why they gap down. Where Walmart, if you go pay for something at Walmart with your credit card, there's a 3% total fee. Like Walmart pays a 1.5% fee, and you pay a 1.5% fee. But Visa or Walmart and some of these other like grocery stores were doing partnerships with these stable coin cards or whatever, where they just don't pay any fees at all to Visa, and that is slowly hurting the sentiment. But I think it's overblown, and Visa actually says we're here to out innovate that and like be a beneficiary of that thing or whatever. So there's a thing there. What do you think of TMC? This is a complete startup. It's just future hopium. I would not really buy this name with anything meaningful. It's like a swing short term. I think it's like a company you trade. You don't just diamond hand this one, because what is this company? They're a startup company. If we go to the revenue right here, it says no data because they've never sold anything, not a product or a service. But what this company wants to do is make these underwater robotics that suck the nickel, copper, and all these rare earth minerals out of the water and then just go and sell them. But dang, they lost 280 mil this quarter, 994 mil. So they're losing a lot of money and have no revenue. So they've having to dilute the shareholder. Look at that. So they now have more liabilities than assets or after the dilution round. So it's a tough spot. And every time the stock really goes up, they dilute you because they have to. And let's hope that I just want to see them finally do something and have real sales. So it's just like a lot of future hopium. I just bought Race in Netflix. Hey, what up, Eric? Yo, nice. Yeah, I think it's, you don't buy them meaningfully yet. You start the dollar cost average on these companies, in this environment with how everything is, you don't just full size these. But yeah, like Ferrari, I started a position back here and then I've been dollar cost averaging a little bit more. And I'm always a fan of doing fractional shares. I actually bought a 0.1 share of Ferrari. So, yeah. Jim says, what are your thoughts on TALK? Is that Talkspace? Hey, let's check him out, actually. Oh, we'll get to HIMS. I forgot about that one. Oh, yeah, hey, that's ticker symbol SE. We'll check that one out. Oh, and Palantir. These are some good names. What dips you like the most right now? Yeah, probably Netflix, Uber, because Uber is just so safe. But yeah, Tier's Talkspace right here, a 33 forward PE, so that's a little expensive. But the market cap, this is a small market cap. If you look in the top right, this whole company is only worth 540 million. So, but let's go look. Are they profitable? So that's the interesting thing. Like, that's real. They really made $3 million net income this quarter. And so they're just now getting net income positive. And if you average out the 4 quarters, they are making net income every quarter, like $1 million a quarter. And at this growth rate, what's it going to be the same time next year? Maybe they'll be making a few mil a quarter. Like when the whole company's worth 500 million, and let's say they make 5 mil of net income a quarter, that's really significant for the market cap. And check out the top line. Again, we're a small company here, but the top line sales are up 25% after 22. And just for a nice cherry on top here, because I don't normally like these small market cap companies, but this is like takes a lot of risk off the table. They have a really good balance sheet. No debt, $91 million of cash, no debt. I wonder where their cash is going. Is it share buybacks? Well, let's see right here. Cash and financing. So yeah, I think they just did 10 mil of buybacks. No way. So let's see. Net income's up 73 and the EPS is up 100. No, wait, hold on here. Let's go see the exact numbers. So you can just go to the cash from financing activities. So yeah, they did 8.8 mil of buybacks this quarter, 2 mil, 6 mil. Again, when the whole company is worth 500 mil, 9 mil of buybacks is really significant. So that's a nice little interesting small cap. Out of all the companies worth 500 million to buy, this is certainly a good one. And that's why I guess they're on my watch list too. Hey, Nikita, you said, why am I muted on your TikTok? You are actually not muted. I actually can see your comments. Wait, dude, oh my goodness. My moderator, Nick, muted you. Oh my goodness. I just saw that. What the heck, Nick? How do I have to fix that. Yeah. Oh my goodness. Hey, yeah, yo, that I am so sorry. Yo, you have just been unmuted. Um, I did not even. This is what. Okay, let me remove him. Well, okay, let's keep going here. So, Thank you for telling me, Nikita. I would never do that. So thank you for telling me that. Okay, yo, Sabil, how's it going, man? Good to see you. Okay, does YouTube have mods? I'm the mod here. Oh, we never have issues on the YouTube stream. It's only TikTok that has like a bunch of no, no, Nick, don't worry about it, Nick. It's all good, brother. Um, he didn't do anything wrong. Well, okay, let's see here. Are we not watching the FOMC? No, we're not watching the FOMC meeting, but we are going to watch how the market reacts. It looks like the market right now is oh, so the Qs actually did just sell off a bit of the rally right here. Usually this happens as Jerome Powell talks in 5 minutes. As he talks, it usually moves the market, usually sometimes a lot more than the initial reaction. So let's see right here. SE right here. Yo, C right here. This is a really interesting e-commerce name. Wow, they've actually been tanking right now. Let's go see. So the forward PE is at 36. That might still be a little expensive though. A 36 forward PE. Here's a cool metric. Their quarterly active users are 670 million. Same time last year, they were 628. So a nice little quarterly active users growth there. So yeah, they're an e-commerce company, I believe in Southeast Asia. So yeah, look at that. 70% of their sales are Southeast Asia. So it's kind of like a Southeast Asia Amazon. So they're an e-commerce company, also digital financial services. Let's see how this is going. The e-commerce revenue, these year-over-year growth rates are phenomenal. You know, it grew 35 after 35 after 36. Digital financial services is up 60%, nearly to $1 billion in revenue. So that's phenomenal. And check out the bottom line as well. And this is in USD too. The year-over-year triple-digit net income growth for the past 4 quarters. Pretty crazy growth there. Okay. All right. Any thoughts on Boeing? Yo, Eric. Ooh, I don't love Boeing because here's they just can't make any sort of money. Just from a pure financial point of view, like the government can't let them go bankrupt. But look at this kind of net income right here. They lost 5.3 billion net income this quarter, 600 mil. They actually haven't made a single dime of net income. I think like ever. Like let's just see, like they lost 5 bill, 600 mil, then billions here, more billions. So it's just not one. And, leveraged as well, lots of liabilities. Uh, they're down from their 2019. Nothing blows me away on Boeing to really want to buy them. They can't pay a dividend. They just lose they lose a lot of money, but the government can't let them go bankrupt. And I think they've been one of the worst performing actual. Well, I guess they're more like an airline related company. Not so much an aerospace and defense name, because that's the sector I'd want to buy. I want to buy the aerospace and defense sort of names, like is ATAI one of them? I think no, that's not the ticker symbol. Anyway, a Raytheon, an RTX, like a Collins Aerospace. That's the kind of sector I like. Oh, hey, watch out for the people in chat. They're like, yeah, see, like I'm blessing the first 5 people that. Well, don't worry, I can actually copy this person's username and get them fully kicked off TikTok. Don't worry, I got a friend now. But yeah, whenever you see someone in chat, like the first 5 people to DM me, I'm giving a $500. Yeah, don't ever fall for that. Just know I literally sell nothing. I have no course book, WhatsApp. I'll never follow you, DM you, nothing ever like that. So I literally sell nothing at all. Just on here, give my opinion. I'll never follow you, DM me. So someone said, Abby said S&P Global. Yo, S&P Global is a really cool data company. And they have a shared oligopoly with Moody's for the credit rating industry. They rate debt. So yeah, their ratings business is 32% of the business. Again, shared oligopoly with Moody's. And also this app I'm using, this brokerage right here, Moomoo, actually gives S&P Global a lot of money. Look at these financial estimates right here. Notice down here right below EPS, it says data from S&P Global. So they pay S&P Global. A lot of brokerages and apps do that for the data, like all this is from S&P Global. So it's just really cool to see. Yeah, S&P Global has been crushing every expectation. Wow, the EPS is going to go from 354 to 420. What's the forward multiple on that? So the forward PE is at 29. That's pretty well. It might be a slight bit expensive, but It's a quality company, just a quality compounder. And you get a nice yield, I think. Yeah, 0.8% dividend. They raise the dividend slightly every year too, so not too shabby. Do you use Bloomberg? No. Hey, this is a brokerage, Moomoo. If you want to get this brokerage, it's in the link tree in my bio, very first link there. Uh, Broker where you buy stocks on. Any mining companies worth looking at? Not really. I don't think. Nah. Hims. Oh yeah, Hims. I forgot to get to this one. There is a dilemma here because Hims can no longer sell their weight loss prescription, and that's the unfortunate part. So their current PE, the price to net income right now is a 72, and they're trading at 70 times next year's net income. So there's not any bottom line growth, and that's because they used to sell the Ozempic on their website, these weight loss prescriptions for like $4.99 a month or something crazy. But now they've cut the price of it to like $150 a month. They're like something where they're not collecting as much near as the margin as they once were. But check out the top line growth. The top line growth is crazy. I know they have a lot of subscribers now. The top line revenue is up 50% after it grew 77, after it grew 84, after it grew 93. So the top line is phenomenal, but it's the net income that's being questioned here. So the revenue grew 49, but the profits fell by 47, and it's supposed to like the EPS projections aren't great either. They miss. So yeah. But here's that's the bad news. It's just the net income. What are they going to do? But here's a cool metric we get. Revenue increased 49%. Or fueled by a 50% rise in online revenue and a 21% subscriber growth. So they have 2.47 million subscribers, which is pretty cool. So yeah, adjusted EBITDA grew 57%, but exceeding internal efficiency targets despite margin pressures from price reductions and GLP treatments. That's kind of what I was talking about. Price reductions and GLP/weight loss prescriptions. The company completed a $258 million acquisition to expand into European markets and launch new hormonal health products while reducing GLP-1 treatment prices by 20%, impacting profitability. Yeah, so that's kind of what I was talking about. The bottom line is getting hurt by their cutting of the prices there, but it's an interesting name for sure. Again, they had no debt before today, but they did that acquisition. It wasn't too big of a deal. Anyway, the sad truth is they might be expensive. They might be expensive at this price, Hims. It's not the best risk to reward right now. Here, Nick, I'll give it back to you. Don't worry. So let's see here. Teach me someone. Hey, Logic, just watch out for people. Yo, by the way, I don't teach, coach. I literally sell nothing. The only way to learn from me is just watch the streams, watch my YouTube videos. The best way to support me is just subscribe to my YouTube channel. It's called Nathan Roberts, and the link tree in my bio. You can just type into YouTube Nathan Robert. I'm streaming on there. But yeah, you can replay the stream and just if you missed anything. Yeah, I don't sell or teach anything or nothing like that. Ooh, CoreWeave, actually, you already Rolls Royce. Let's do Rolls Royce. Remember to get to CoreWeave a little later. We'll look at a few more here, but wait, RR, that's Rich Tech Robotics. Is that also the ticker symbol for Rolls Royce? I guess we're about to figure that out. RR. Nope, I can't find it. I think it's RYCEY if I remember. Ooh, see, I got that memory. Okay. RYCEY because they're an ADR. This is a company. A lot of people know Rolls-Royce for like the cars, those fancy cars, but they're really an aerospace and defense company. Check this out. 47% of their entire business is their aerospace business. They make jet engine planes or engines, and defense revenue is 24%, power systems 22%. So again, they're a European company, so they report in halves. But for the first half of 2025, record $4.4 billion of after-tax net income. Finally deleveraging their balance sheet. They now have less liabilities than assets. So they're just really worked on their bottom line. What's the forward multiple? 25 forward PE on Rolls-Royce. Oh, hold on. All those numbers we were looking at were in British pounds. So obviously they're an ADR. And net in USD. Oh, wow. It's even better in USD. They made $6 billion of after-tax net income so far. Not too shabby. What platform are you trading, sir? Yeah, hey, if you want to get this platform I'm on right now, it's actually in the link tree in my bio, the very first link there. If you're on the YouTube stream, it's in the link in the description. Yeah, my favorite brokerage. Yeah, Jerome Powell will speak, or should be speaking right now. But we would watch it, but I don't want to get in trouble. So yeah, we'll probably end the stream because I know a lot of people want to go watch that. We'll look at a few more stocks here. Here's SoFi, and we'll actually, hey, by the way, if you hit the follow button, we stream every single day. So Here's SoFi Technologies right here. I do own SoFi as well. I might be biased. They are expensive. SoFi at a 47 forward PE, but SoFi certainly deserves a high multiple. Check this out. Here's why, in my opinion. If we go to their financial services specifically, these growth rates are so crazy. The revenue's up 76%, after grew 101, after grew 140, after grew 80. Like the growth on this financial services, no analysts expected. We can see the analyst expectations down here. That's the orange line. This is why this is a growth beast of a company. Every quarter they beat on revenue, they beat on EPS, which is net income, they beat on EBIT every quarter. So that's why I really think people are starting to take SoFi seriously. Printing over 100 million net income a quarter, sales revenues growth. So anyway, SoFi, I do own them. I'm totally biased, but I do own them. Ooh, hey, Joby. Ooh, I have nothing good to say about Joby, sadly, because they're a revenue-less company burning through a lot of net income. But I bet Joby is up on the SpaceX news. We'll actually maybe check that out after this. Let me check out Palantir. I think Nick said Palantir earlier and I never got to it, but I saw someone else. Hey, what up, Kenton? Let's do Palantir. Yes, sir. So Palantir, this is a beast of a growth company, and I wish I owned them, but I just cannot pay their expensive valuation. The forward PE is a 255, so that's a really expensive forward multiple. The price to revenue is 115, not like price to net income, but the price to sales are 115. But check this out. Here's why they deserve a high multiple. If we go to their government revenue right here, the government revenue grew 55%, after grew 33, after grew 15. Like the growth rate is growing on the government revenue, but more impressively is actually the commercial side. The commercial revenue grew 73% year over year, after grew 26, after grew 10. Like this 76% growth was so crazy that they've had this quarter. And, not just going the top line, but bottom line, record profitability, absolute monster balance sheet, literally no debt at all, lots of cash. So Palantir is one stock I want to own. I did own them before. I regret selling them. Like I would be up 1,000% or almost 2,000% on the shares I sold. So yeah. All right. If your homeboy Warren Buffett asks you to take over Berkshire Hathaway, what are you doing with $380 billion? Oh, we're buying Coca-Cola Consolidated fully. We're buying Carlisle. We're we're buying Powell Industries, Comfort Systems. Okay. What do you think of Lightspeed point of sales? Ticker is LSPD. Lightspeed POS. Is this like a restaurant like point of sale system? Let's go figure it out. So they're a $1.7 billion company. Point of sale software for restaurants and retailers. Yep. So I would much rather own a Toast. Well, let's go look at their numbers. Let's see how growthy they are. Or are they growing like Toast? So actually slower. So I mean, not terrible though. Double digits, 15, 10. Oh, great balance sheet. But notice this right here. Whenever your company loses net income, that net income has to come from somewhere. So that comes out of their cash pile. So that's why the assets kind of just decline, sadly, every quarter. But they have no liabilities. That's great. And let's hope they can get net income positive. And double digit top line growth. I don't like the bottom line, but I love the balance sheet. We want to see them narrow losses, but probably rather buy a TOST, a Toast. Oh, wait. What was that one? Oh, yeah. Joby right here. Here just sort of kind of companies like I just don't want to, when it just from a pure financial point of view, it's hard to trust this company, in my opinion. If we go to Joby Aviation right here, we go to their revenue. Oh, hey, looks like they just actually got their first ever revenue, because last time I looked at this is what I was literally looking at. A company that did 15K of revenue, but 22 million. What's the expectations? Oh, so actually look at this. So the revenue is going to go from 15K to 15 million. So I did not know that. I'm glad that we looked here, because they actually have real revenue, or 15, 20 mil. What's the expectations? Or 14 bill market cap. And net income is, so they're losing, a lot of money, 400 mil, 300 mil, 100 mil, 250 mil. Yeah, so they lose a lot of net income, and I know they dilute you as well. We go to the cash and financing activities. So look at the largest shareholder. The largest shareholder is Toyota Motor. Kind of interesting there. So yeah, so if they cut interest rates, will the market go up? They already did cut interest rates by 25 basis points. And yeah, it looks like the market did go up on that news or at least my portfolio right now. Or how's the Qs doing? Oh, Qs are back green. No way. They hit a new intraday high like 2 minutes ago when I wasn't looking. They scared past me. Hey, free me and Daniel. Good to see you. Hope y'all are having a great day. We're looking at a few more stocks here, then I'm running. But if you got a stock you want me to look at, Kadu, let me know, homie. So here's Rio Tinto right here. This is a rare earth kind of aluminum so iron ore is 55% of the revenue. Aluminum is 25% of the business. Copper, 17%. So commodity play. And they're headquartered in London, and here's where the revenue comes from. So China is 60% of the revenue. United States of America, 16%. So let's see the actual numbers. This is a nice dividend play. So since they're a British company or whatever, they report in halves. So that's why it says H1, but they're printing money every quarter, like 2 to 3 bill in net income a quarter, which is great. Yeah, that's after they, interesting. Oh, wait, I want to show the dividend real quick. The dividend is a 5.3%. It kind of changes every quarter. Yeah, if you go and look at the individual quarters, it changes every quarter, just kind of like based off how much they make. But how many bull shares do you have? Yo, I have 50 shares of Webull exactly in my Roth IRA right here. Check this out. Webull, 50 shares, and we're up 13% on them. We were buying them during the kind of Thanksgiving dip on that week. Yeah, we got a share at 770. Yeah, Webull is expensive here. I wouldn't really have it as like a meaningful size position yet. Has Futu's paid the special dividend? Actually, they have not, I don't think. We are waiting on that, and they might not do it. And even if they don't do it, I wouldn't be upset because I know how great, or I don't necessarily need a dividend. So, yeah, I love Futu. Yeah, Futu, Robinhood. I own Robinhood, Futu, SoFi, Dave. On a lot of fintechs right there. ExxonMobil. Yeah, I think ExxonMobil, they've been one of like the best performing gas stocks. You buy, this is your number one oil play. You buy this for the diversification. You're not buying this stock to outperform the tech heavy S&P 500, but you're buying it for the diversification because whenever there's war fears, currency fears, interest rates, or inflation, oil does good in those environments. So you own it also for the dividends. So in the meantime, while you just hold this as a small portion of your portfolio, it's worth diversifying a little bit of your portfolio into oil, but not a lot. But in the meantime, you get a 3.3% qualified dividend. You get a great yield. Gotta go. Thanks again. Hey, see you later, Nick. I hope you have a great rest of your day. Yeah, I'm also about to hop off here. If you guys want to hit the follow button, we actually stream every single day, sometimes twice a day. I might actually try and do one a little later tonight because this was a bit of a shorter one. Well, we've been streaming for an hour and 40 minutes, but we might do another hour live stream or two later tonight. Here's AbbVie. Yo, this is a stock that doesn't just have a great dividend, but I think is going to continue to perform well in stock price appreciation. Check this out. Oopsie. I guess here's this right here. Immunology sales led by Skyrizi and Ridvoq grew 40%. Neuroscience revenue increased 20%. Humira sales declined 55%. So check this out. This company has a 2.88% dividend, and that dividend is super safe because normally most companies with like a high 3% dividend don't appreciate too much, but I think this one will give you a 3% dividend and still like 4 to maybe 5% stock price appreciation every year for like a total return of 7 to 8%. So yeah, look at this. They own Skyrizi. You're not going to believe the growth here. Look at this. The revenue's up 46% year over year. Like the year over year growth rates in the middle are crazy. It grew 46% year over year, after grew 50, after grew 52, after grew 85, literally from zero. So it went from 300 million sales a quarter to 4.7 billion just this quarter, a record. And that's just one of prescription. Here's Rinvoq, second largest prescription. It's up 35, after grew 45, after 55, after 53, after like the growth is just insane on some of these. But then there was the Humira though. It's also offset by Humira. They said this one, down 55% year over year from the patent expiration, whatever, Botox therapy. Anyway, I really like AbbVie. They had a little one-time adjustment to their net income these quarters. So you really look at a forward multiple, and the forward PE is a 26. So pretty fair. 26 forward multiple on AbbVie. Great company, I think. Hey, thanks for all that. Yeah, Dave has been falling off the past week. The valuation is actually pretty cheap. It's super cheap, actually. Here's Dave right here. Forward PE is a 16.5. Current PE is at 19.9, so the net income or EPS is supposed to grow another 30%. It has had a pretty monstrous year, though. I mean, just like 2023, this was a $5 stock, and now it's $200. We bought them at like $80. Hey, OLP, you're still here? No way, homie. Hope you. Thanks for still being here. No way. What up, OLP? All right, we'll look at one more here. You actually okay, uranium stocks. If you I don't know, I would buy just ticker symbol URA. This is the whole uranium ETF right here. So if you don't know which one to buy individually, just check out ticker symbol URA. And if I had to buy one individually, there's only two I would pick. I'd pick Camco. This is the best one, or Cameco. And maybe UEC, but LEU is a phenomenal one. And I like to just own the nuclear reactors that use their uranium, such as a CEG right here, largest nuclear play. They own 30% of all the U.S.'s nuclear reactors. So yeah, and the reason uranium has been booming in a lot of these uranium stocks is because we're no longer getting our uranium from Russia and China. We're trying to source our own uranium from like Canada and stuff. So Cameco is a huge beneficiary of that. They're Canadian company. But look at their stock price because they have real numbers, real revenue, real net income. So Cameco is the best one. But anyway, hope you guys have a great rest of your day. Let me give you a quick portfolio update. It's going to be so subject to change because Jerome Powell is speaking right now and he's going to move the market. But yeah, we're up 0.5% on the day. Today was the day Jerome Powell cut interest rates. And year to date, we are up 16.5%. Here's our Roth IRA is down 1% on the day. So this is down 1%. Dang, HCA Healthcare is getting hurt today. We're only up 1% on them. This is a great company. I'd love to be down 10% on them so I could just like load the frickin' boat on HCA Healthcare, make it one of my largest positions. So that's our Robinhood portfolio. Then we have our Webull kind of risk on portfolio. Here, I love being fully transparent. You know, all time, we're only up 21% in here. Got some winners and some big losers in here. Some new positions like SO. This is one of our newest position in here, actually. SO, they have a 3.5% dividend yield. Nice little dividend growth company there. So yeah, and then we have our Moomoo portfolio, which is known as our buy and never sell account. Where once you buy a stock in here, we never sell it. You know, we just hold it for the long run. Year to date, we're actually up 87% because of this strategy. You know, we were doing just as bad in April, down 16, but we're up 87% because we didn't sell or trim out of these stocks before today. Like Comfort Systems are pretty much at an all-time high today. We bought the stock earlier this year and we haven't trimmed her at all. So anyway, hope you guys have a great rest of your day. See you all very soon. And yeah, SMX. Oh, we did get to that. I'm sorry. But yeah, hit the follow button if you want. Watch out for people impersonating me, of course. I literally sell nothing. I have no course book. I'll never follow you or DM you. But if you do want to support me, the only way to, or best ways to, is just subscribe to the channel. Or subscribe to my YouTube channel, I mean. It's called Nathan Roberts. Also in the link tree in my bio. It's free. Of course. See ya. Thank you to everyone on the YouTube stream the most. Good time. Yeah, too late, Powell. See ya, Looney. Free me, Tommy, Daniel, Brian, Paul, all the